Hey, it's Gail with Traders Help Desk, and in this presentation, I actually want to discuss the top 15 habits that are shared by profitable traders. Now, while some of these may be intuitive to you, some of them are really going to surprise you. So let's get started. Now, number one, trading has to be treated as a business, cannot be treated as a hobby or as a game or just something you do when you're bored. Okay. This is probably one of the reasons that I succeeded in my journey because I always treated it like a business. I was a single mother of 6 kids and I didn't have money to waste. I didn't have money to play games with or to just treat it as a hobby. I needed the income to help raise my 6 kids. So I always treated it as a business. And anytime you start out treating it as a business, then you go through logical steps that will lead you onto a path to achieve your goal. Now, if you're doing it as a hobby, you tend not to do these steps. Why? Because it's a hobby. It's not really producing income for you. It's something that you enjoy doing. Fortunately, I enjoy doing it, but I've always, from day one, treated trading as a business. Now, one of the first things you have to realize when you're setting up your business is that you have limited capital. At least I did. I didn't start out as a millionaire trader. I had limited capital. So I had to implement money management from get go. Now, the reason that this is so important is if you're like me and you had limited income, then you had to say, okay, how can I make this last? It's sort of like when you get paid once a month, you have to make your paycheck last. The same thing applies to trading. How can I make this account last? Because I know I'm going to make mistakes and I know I'm not going to be the world's greatest trader. So, how can I make my trading account last? In other words, I'm not going to get a margin call. Well, the first thing that I did was I developed an edge right out of the gate. The way that I did this was basic numbers, okay? I realized I'm not going to be the world's greatest trader. Now, there's a lot of traders I know that come to me and they say, well, I want a 75% winning ratio. Well, I hope you achieve it. That's the only thing I can say. Because most traders cannot achieve that. In fact, most traders are going to have more losses than they have winning trades. And this is shocking to a lot of new traders, but they still make money. Why? Because they use risk to reward. In other words, if I'm risking $1, I want to make at least $2, hopefully 3 or 4. The reason is that helps recover those losses. And at the end of the month, at the end of the year, I can still be profitable. At a recent Nadex webinar that I did, I had two strategies up. One had 65% and one had 30%. And I asked everybody in the presentation, which one would you choose? Would you choose the 65% or the 30% as your trading strategy? Of course, everybody chose the 65%, and it had lost money. Why? Risk to reward. Actually, the strategy that only had, I believe it was a 30% winning percentage, actually was the one that made money. The reason was it had a higher risk to reward ratio than the one that was 65%. This is making the numbers work for you to become profitable in trading. Now, the next thing is if you're going to treat this, remember the number one thing was treating trading as a business. Okay? That means that successful traders have a plan. They take the time to actually learn the technical analysis that they are going to use in their trading. They take time to learn the price bars. They take time to develop money management and risk to reward parameters. They identify their entries and they identify their exits. There is very little that you can control in the market. And the sooner you realize that, the better you are as a trader. What can you control? Your entry and your exit. Okay? So having that in the plan allows you to say, hey, I don't know what the market's going to do, but I know what I'm going to do. And that is extremely important in trading. Number 5, successful traders always follow their plan, or at least they try to. And this is hard. A lot of times you get emotional in a trade. You have to step back and say, okay, I have a plan and I'm going to trade my plan. I'm not throwing darts at the screen to see what happens. Instead, I have taken the time to develop this plan. I have tested it, and now I'm going to trade it. Now, an important step in this is actually recording every single trade that you do as a trader. It's also called a trading journal, okay? The trading journal is what holds you as a trader accountable for every trade that you do. Did you follow the rules, or did you just decide to enter the market on a whim? Okay? It's being accountable, knowing that you are holding yourself accountable for following your rule set that you took the time to develop, that's going to make a difference in your trading. Now, because you took the time to develop a trading plan, you took the time to set your parameters. This means that on the live edge of the market, you don't allow fear to control your decision, okay? You don't panic when the trade is going against you. You know exactly what you need to do at any given moment of your trade. Additionally, successful traders, they don't take a loss personal. The market is going to do what the market wants to do when the market wants to do it. It's one of my favorite sayings. Just because the trade went against you doesn't mean that you were wrong. It doesn't make you a loser because you lost money. Just the way the market went, okay? And you have to be able to accept that. You can't take it personal, okay? The market doesn't care who you are. They don't know who you are. They don't care who you are. It's really that simple. Now, a lot of beginning traders and even experienced traders will measure their success by the dollar amounts that they make. That's the wrong way to measure success. The way you should measure your success is how you are following your trading plan. Are you doing what you need to do in order to achieve your goals? And again, it's not related to a dollar amount. If you focus on what your goal is, and that is to have trading as a business, then the profits will come if you're doing what you have outlined in your plan and in your strategy. Hey, sometimes there's just not a trade, and you have to wait, okay? Not being in a trade is just as important as being in a trade. There's a lot of profitable traders out there that will tell you, hey, I don't trade that much, okay? But it's the one or the two trades that I hit, that I got right, that really made the money for me that week or that month or that year. Some of my most successful clients have actually came back and told me, I'm surprised because the less I trade, the more profitable I am. Why? Because number one, they're probably not rushing to get into a trade, number one. And number two, they're making sure that the criteria fits their trading plan. Once you do that, you realize I don't need to be in the market all the time. I just need to be in the right trade setup. Additionally, profitable traders realize, hey, today's not the only day that I can take a trade. The market will be here tomorrow. It will be here next week. It will be here next month and next year. When you realize this, then you realize, hey, I don't have to take the bad trade setups. I want the good trade setups. And this is where your focus tends to shift and you say, okay, is this really my trade setup? Or is all of the criteria met? And if it's not, it's okay. Tomorrow will come. Successful traders do not try to pick the tops and the bottoms of the market. Yes, it's thrilling to pick the top or thrilling to pick the bottom, but that's not the way you're going to make your money. What you do is you wait for the turn and then you pick a low risk entry point to enter into that trend. That's where most of your money will come from. Successful traders never double down, okay? Again, it goes back to discipline, okay? If you're already losing money on a trade, then why would you lose more money? Because you don't want to be wrong, because you think the market's going to go there and you're going to miss out on this great move. Again, you know, you go back to risk to reward ratio. If you're doubling down, all you're doing is increasing your risk. Instead, go ahead and enter. If the trade goes against you, you exit. If the trade is going in your favor, you stick with it. Profitable traders, they do the same thing over and over and over and over again. They have certain trade criteria, and these are the trades that they trade, okay? If you have a trade that does not set up, that does not meet the criteria, then you say, no, there's another one coming in the future, okay? It's not about changing your rules and changing your plan and changing your technique day in and day out. It's sort of like production work. You're doing the same thing day in and day out. Profitable traders also use price as a guide in making their decisions on whether to enter or exit. It's built into their trading plan. You know, when you're trading, you can have all that technical analysis indicators you want on your chart, but bottom line is, it is the price that you are trading. This is what's going to determine whether you make money or whether you lose money. And a lot of times indicators can be lagging, but as I teach my students, it's learning to read the price bars that will actually turn a lagging indicator into a leading indicator. So again, you have to learn to read the price bars. And finally, number 15 is that successful traders have realistic expectations. I see this a lot. You know, you come into trading, you start with a $500 account and you want to go to $1,000 by the next week. That's not realistic. Okay. As a beginning trader, you know, number one, you probably shouldn't start with a $500 account. Save the money, practice in demo. Just keep adding to that account until you can prove that the demo is able to make money in your strategy. Then you go over to a live environment. But again, you have low expectations. If you have low expectations, they're easy to achieve. Whereas if you set the bar too high, you're not going to be able to achieve that goal, number one. And number two, you're just going to cause a lot of psychological damage. Again, this goes back to when I started trading and I wanted it as a supplement for supporting my 6 kids, okay? I didn't start with, okay, I'm going to make 75% winning ratio. No, I'm not going to be that good, okay? So what if I can just get 35% of my trades correct? Could that make money for me? And yes, if risk to reward is in your favor, it could. Then I could build from there, okay? And that's exactly what I did. That's how I was able to send my kids to college, was by setting realistic expectations. You know, money management, If you have money management in your favor, as you grow your account, you can trade more contracts, okay? But initially, you have to start with that limited capital, and that's where you have to set those realistic expectations. And again, I set mine low because I wanted to be able to achieve it as a new trader, okay? And then as I progressed, I set the bar higher. That's what you have to do as a trader as well. Don't set it at 75%. You know, I've been doing this for 15 years, and yeah, that couple of months I might hit 75%, but on average, I'm more like 55 to 60%, even after 15 years. Okay. So set a reasonable expectation. Don't set it for the moon and the stars. I do offer a lot of products that will help you in your trading. I have numerous books on Amazon.com. I also have online trading video courses as well as individual indicators and a silver trading package that also comes with a vast array of online trading videos. I hope you enjoyed the presentation and I look forward to working with you.